Hello and welcome. This is the Insurance Pro Blog Podcast. I am Brandon Roberts.
And I am Brantley Whitley.
And you are listening to the internet's favorite podcast about life insurance.
That's right. Still
not that hard to be number one, but we did it.
As I've said before, we just keep coming back for more. That's really what qualifies us to be number one. We're coming up on 14 years of podcasting.
We are.
Yeah, I had that realization the other day. Most people didn't even know what a podcast was 14 years ago.
No, they did not. No, they did not. But we did.
Yeah.
I don't know if that was good or bad, but we did.
I've had people ask me before. They'll be like, "So you've had a podcast for that long? Like, how did you know that was going to work?" I was like, "Well, back up for a second. You're giving me way more credit than."
Yeah. Do you want to know we'll do it right now. I know people like it when we get right into it, but this won't take long. What was the origin story of the Insurance Pro Blog Podcast? Well, it was the other one that we named it, but basically same thing. Brantley came to me one day. Is like, "What do you think about starting a podcast?" I was like, "Sure. Figure out what we got to do, and we'll do it."
Yeah. It was amongst the short list of things you could do for free. So that made it a great idea. Mm-hmm. Mm-hmm. Yeah. Yep.
So today we're going to differentiate life insurance from annuities.
Oh, I thought we were going to have a fight, life insurance versus annuities.
Ooh, that probably would have been more interesting. Can we put it on the White House front lawn?
We're going to host our podcast from the... I bet we can do an AI picture and have us set up on the front lawn.
We're here to help you decide if you're trying to create income with insurance style contracts. Do you want annuities or do you want life insurance?
Right.
That's what we're doing. And this is questions comes up from time to time because as people are looking for other ways to create retirement income, or realistically any way to create retirement income.
Yeah.
They look at the various options that are out there. And it turns out the idea of just selling a certain number of shares each month or whatever it's going to be, that's not all that appealing.
Right.
It is. Tricky.
It sounds good in theory, as we've talked about before. It sounds simple. Mm-hmm. The practical application of it in real life is a little bit tougher. People figure out. And you know, I did want to point one other thing out. You said, you know, some people are asking this question, like, can I use life insurance and annuities? Should I use one or the other or both? The answer is yes.
Yeah. Yep.
And we really wish that we had more people asking this question, not just because we sell life insurance and annuities. I mean, that is one, that's obviously self-serving and in one aspect. But we've seen we have, as I've said also many times before, we've seen the insides of a lot of people's personal finances. Mm-hmm. There are a lot more people who should be asking how life insurance and annuities could fit into their retirement income picture.
That is very true. That is very true. You know, on that notion of selling shares seems really easy. In concept, but when you try it, it kind of reminds me of a feeling that I had back in college, like especially in like certain math classes. You'd get the TA or the professor to show up and start doing examples on the board, and you're like, "Oh, this is easy. I got this." Then you go home to do it, and it's like, when there's somebody in front of me showing me what to do, this is easy. But
exactly. He did that proof in like 5 lines. I'm on the 3rd page, and I still haven't gotten to the end yet.
It's true. And, you know, it's very easy to feel confident when it's not real.
Well, look, everything in personal finance, at least the personal finance media space, makes it sound like this is super simple.
Yeah.
And in theory, things like the 4% rule are simple. It's a basic math problem, right? Mm-hmm. The execution of it is much more nuanced. And most people don't have the experience or the confidence, really more than anything, to know that they're doing it correctly. Not that there is a correct or incorrect way to do it per se, but there are definitely ways that may be better or worse for you and your circumstances. And I think, unfortunately, many people figure that out when they've too late, in the sense that they back themselves into a corner, and that's the only option they've got left.
It sounds so simple because most of the people giving the advice don't actually do it.
Precisely. Yeah. You talk to them, they're like, well, how do you generate income? Oh, I use annuities.
Right.
Like, oh,
or,
okay.
I'm 37. What are you talking about? How I generate income? I mean, that's the number of conversations or arguments that I've gotten into about finance or even insurance with people that was very clear that all of this is conceptual for them. Like they've never actually done it. It's a lot.
Yeah, it is a lot.
And so using insurance products as a way to create income, I'm not saying all of your income. That's never been our point. But having it around as a supplement to the process of creating retirement income is mighty helpful.
Yes, it is.
And so from here, we have to ask, well, which one should I use? And it really is an answer that doesn't necessarily universally say, well, this or that.
Right.
And as you already alluded to, both is a perfectly acceptable answer.
Yeah.
But to get a little more granular and to be a little more helpful, we can identify the strengths and weaknesses of each one.
Sure.
To help point people in the right direction. And then you come to us and actually buy the annuity or life insurance policy. That's the part we like. So
yeah,
go ahead and do that. But in general, what you should understand about annuities and life insurance is that they're both very low volatility style products.
Oh, I was going to make that very point. That's what makes them so good as an income tool.
Mm-hmm. Mm-hmm. That means
you and I manage other things, either professionally or personally, that generate income.
Yep.
None are as simple as life insurance and annuities.
They are not.
And the simplicity comes from the low volatility. I didn't give the punchline, but
yeah. It creates predictable, it creates reliable income that you can use while you're also trying to pursue other things that might improve what you can do with your other assets, right? Like you can own other things that might give you more income than you thought was going to be the case.
Sure.
Great. Now you can go do some other stuff you didn't think would be attainable. Great. Mm-hmm. But if it doesn't work out and you don't get to do those things, you still have the income that is produced by insurance style products, so that now you're not trying to cut the cat food in half for dinner.
I like the presumption that you're still eating cat food. You're just having to eat less of it. Or able to eat less of it. You could upgrade to Fancy Feast and away from
Hey, there's a long-standing use of cat food jokes for poverty at the Insurance Pro Blog podcast.
Yeah.
We even named a podcast Meow once. But so to start really differentiating, first you should know that annuities provide guaranteed income.
Yep.
Life insurance does not.
Correct.
So with annuities, we can create a contractually guaranteed income number. And that cannot change but for absolute failure of the insurance company that issued the annuity contract, which is extraordinarily rare.
Yep. We did a podcast about that not so long ago.
Mm-hmm. Life insurance income stable, but not guaranteed. The amount that's coming from the life insurance policy is not a absolutely guaranteed number. It could fluctuate if you're like us and you know what you're doing and you make reasonable assumptions about what the income number is going to be. The chances that there's going to be fluctuation are very, very, very low.
And there'll be, again, lots of ifs there. Generally, I'll use the word generally. Mm-hmm. The compliance people love it when we do that. Generally speaking, you're going to see less fluctuation.
Yes. Yeah.
And you see things very clearly. The interesting thing about life insurance, if you're going to use it as an income source, is that you can dial in, even if you decide we didn't do as well as we thought, so we're going to take less income. You can do that with a greater degree of certainty because you know what happened.
Yep.
For sure. And you kind of know what's going to happen for the next year. So, within a range.
Yes. Yep. Now, the fact that life insurance income is not guaranteed could be just as much a positive as a potential drawback.
Right.
Because what could happen is accumulation of life insurance values is better than expected.
Right.
Which means income goes up.
Yes.
So that takes shape in a lot of different ways. So it could be, look, we start income at this date, we assume a certain rate of return, so we're taking X out of the policy each month. And 5 years down the road, it turns out this policy is actually performing better than we thought.
Yep.
And there's no reason to believe that this current trend is going to turn back around. So we can absolutely entertain the possibility of increasing the amount of money being taken from the policy.
Right.
This is also very much on the table with products like index universal life insurance. We dedicated an entire episode to the dynamic income aspect, as we labeled it, of index universal life insurance, because we make certain assumptions that we think are a little subdued, but they're reasonable for the sake of not overstretching what we think index universal life insurance will produce.
Yeah.
We don't
want to set expectations too high and have someone plan on a certain degree of something happening.
Right.
That's, and then we're way off. That's
correct.
That's
correct.
very dangerous. We're trying to help people. We're not trying to put them in, in dire straits when they need the money.
Mm-hmm. And when it comes to index universal life insurance, there is a little bit of a sort of multiple aspect or multiplication aspect, or I hesitate to use the word leverage, but it kind of applies here in terms of how the results might outpace expectations.
Yeah.
But it works in both directions. That's why we hedge.
Right.
So if the very optimistic, favorable scenario unfolds, we're going to have way more money than we thought we were going to have. We're going to be able to produce more income. But if that doesn't happen, we're starting at the basis of let's shoot slightly negative versus overly positive here.
Right.
And it turns out when you do what we do, it still looks pretty great as far as a yield on cost.
Mm-hmm.
So that exists as an upside despite the guarantee or the lack of guarantee that life insurance would bring to the table. This being said, when it comes to annuities, there are some annuity contracts out there that do have features that would increase the income benefit, guaranteed income benefit over time.
Right.
And some of those are just fixed. It's going to increase by a certain percentage each and every single year, which aren't always super attractive if you compare them to what the level guaranteed income benefit is right out of the gate. But there are still other products that have the ability to increase the income based on some non-guaranteed factor. Could be an index account movement.
Right.
That increases the income benefit. Does not hurt at all the baseline guarantee that you start out with.
Right.
So if performance doesn't increase the income benefit, it just doesn't increase. But if there is an increase, it can be brought to the table. So there's nuance and robustness to the way these products are being created and manufactured these days that blurs some of these lines in a really good way for the end user.
Yep. I agree.
Now let's speak about time horizon, because this is the one that we most frequently have to address with people coming to us saying, I want to do one or the other for income for me. Because there are moments, I'm not saying it happens all the time, but there are times that people come and they say, I want to buy a life insurance policy for retirement income. And we look at their circumstances in terms of where they are age-wise and what the timeline before retirement is, and we go, this isn't going to be a bad idea for you to use life insurance. Annuities would be better suited.
Yes.
And the inverse happens. There are people who come and say, I want to buy an annuity for income, and we look at them and say, annuities really aren't for you at this stage, but life insurance could do some fantastic things from an income perspective.
Right.
So in general, life insurance needs at least 10 years as a time horizon before it's going to be used for income. Longer is always better, but at least 10.
It's a little more of a crock pot sort of thing.
So if you are planning to retire before that time frame, or you don't have any other way to create income prior to year 10 with a life insurance purchase, it does not make sense as an income tool for you.
Right.
It just doesn't. Annuities will be far, far better suited for that task.
Right. And
because they are not handicapped in that way.
And the thing I want to point out, because we've done this with a fair number of people, is a lot of people think of annuities as, I'm going to buy an annuity, right?
Yep.
And many times the correct solution is a combination of annuities. It's not all your money in one annuity necessarily. It may be. We've definitely had some of those. Mm-hmm. But more than likely, it could be appropriate that it's like, well, we're going to use a single premium immediate annuity for a specified period of time at the beginning to give these other annuities some time to let the benefits accrue, because they're going to, and I'm not getting into specifics, but with some products, there can be some advantages to letting it cook for a little while.
Yep, there can be. There absolutely can be. And so it might look like a combination of annuities, or it might be a combination of annuities out of necessity. Like you may decide, all right, I'm going to look to purchase an annuity, but I either don't have all the money to do it right now, or I don't want to take all of the money where it is right now and move it into the annuity. So It needs to happen over several years. That's difficult to do with a number of annuities that have income features. So that might realistically look like purchasing multiple annuities for that reason.
Yep.
And that's just the way that it breaks down. So one of the areas that life insurance has a bit of an advantage is the flexibility of making continued contributions over time.
Yes.
It allows that, very simply. Annuities are not quite so simple when it comes to that. So that's just a difference between the two. Now, when it comes to the account that the money is currently sitting in, if it's sitting in an account, that oftentimes will decide annuity or life insurance. So if this is your brokerage account where you have a whole bunch of Micron and you're thinking it might be time to sell, and hopefully Micron goes back up before this goes live. That would be, that'd be good. But if that happens and it's just a brokerage account, so you're just going to sell it and buy life insurance, that's fine. You can do that. But you could also buy an annuity doing it that way. If on the other hand, this is all money that's sitting in your IRA, it's not going to be life insurance.
Right.
It'll pretty much have to be an annuity. And yes, I know there are people out there who say, but you could systematically withdraw the money from the life insurance or from the IRA and put it in life insurance. Run, don't walk away from those people.
We've evaluated all of those things 8 ways from Sunday.
Mm-hmm. It's a bad idea. The net
Usually
net's not going to materialize.
I hear someone talk about it and I come to Brandon and I'm like, we might be missing something. I don't know.
Mm-hmm.
Turns out we're not missing anything.
Nope. No one has found the secret keys to the castle that we are still in search of on that one.
Yeah.
It does not hold up. So the account style may very realistically force your hand on that one. And that's okay, because annuities do have a great income piece to them, even if you were originally thinking life insurance was the way that you wanted to go with this.
Yep.
But ultimately, when it comes to creating income with life insurance contracts, the differences between which one is ideal is sometimes a maximization or optimization question. Mm-hmm. Like if I am 45, well, that's a bad example. If I'm 50 years old and I'm going to retire at age 65, should I buy an annuity or should I buy life insurance? There's not enough information about you just yet that can give us a very clear answer on that.
Right.
Because you're definitely within annuity age range, but you've also got time for life insurance to accumulate as well. So now we have to further refine this. Well, is this going to be one single planned payment to something? That puts annuities back on the table. We can accommodate something like that with life insurance as well, but that gives annuities consideration as well. Is it in your IRA or is it in your brokerage account? That's going to matter. Those are all the things that we have to think through in order to decide what the right maneuver
There's a decision tree, as it were.
Mm-hmm. And there's also a taxable implication. So life insurance, we can distribute income from income tax free so long as we do it right. That's a withdrawal to basis and then policy loans, or in some cases, just policy loans. Depends on the type of product and the circumstances. But the distribution is net. So if we have X amount of dollars in life insurance policy and we say we can withdraw $65,000 a year from that, that's $65,000 is going directly to you.
Yes.
There's no withholdings. There's no figuring out what the net is because of taxes. With annuities, there could be. If it's in a Roth IRA, no. But if it's in a traditional IRA or even just a non-qualified annuity, there is an income tax liability most of the time that we have to deal with in order to figure out what the net benefit is. And that has a few different complications that come along with it. One is, if we're trying to hit a specific number, we got to keep the net in mind. But also, if we're going to generate a certain amount of income from the annuity, we have to think about what that's going to do to other taxable realities for the individual.
Right.
So, life insurance doesn't add any complexity to that. Annuities could, in a lot of cases. But ultimately, as you mentioned earlier, combining these things is actually quite beneficial. And using both life insurance and annuities for a way to build out a more stable and guaranteed to some degree income in retirement is a very underappreciated approach to retirement income planning.
Yes.
And there are way too many people on the internet who want to play cowboy and pretend like what you really want to do is have so much money you don't care.
I'm thinking of a line from Tommy Boy, but I'm not going to say it. You can wish in one hand and you can do something else in the other.
I'm just thinking like, and look,
that's not a plan.
I will throw it out there that we have a very self-selecting machine here because we are the Insurance Pro Blog. We talk about insurance. We talk about low risk guaranteed type stuff. It would not surprise me to find out that that's the type of person we attract.
It's a self-selecting sample.
But I've met people of all different economic attainments. And the majority of the people who have so much money they don't care are not that interested in where we think SpaceX is going to go next week.
Don't care at all.
At least not in any sizable manner of their portfolio. Right?
No.
Like maybe we throw $5,000 at this and see what happens.
Right,
but,
right.
That's the majority of their appetite for that.
Yep.
And when they are sitting on a pile of cash, it's not about let's double it from here. Not to suggest that those people don't exist at all. I just don't think that they are in the majority of the population breakdown. And so for many, many, many more people, retirement income is not about trying to get my account balance to be larger than my brother-in-law's. It's about having the income I need to do the things I want to do.
Right. And for most, it's I just want to continue. There's no big, there's nothing big on the other side as much as it is pretty happy with things the way they are. I just like to be able to maintain that. That'd be good.
Yeah.
Most people we talk to don't have some, what am I trying to, I'm trying to think of all the commercials you see, from all the investment companies that advertise about retirement and dreams and, you're going to go buy a vineyard in Spain or whatever it is. I don't know. They've gotten less ridiculous over the years. I will say,
but there was a period. I mean, we're showing our age just a little bit because there was a period during like the 2000s, especially.
Yeah.
When like every investment company had a retirement commercial that was dedicated to somebody retiring and buying some ridiculous thing, as their ideal retirement.
And and the point I was trying to make is, in our experience, that's not what most. I can't recall a conversation we've ever had like that.
No,
with real people.
Nope. Nope. I mean, we see varying different preferences and personality styles.
Yeah.
People who will flatly admit, hey, look, there's certain things that I do with money that most financial gurus would say is bad, just irresponsible or whatever. But I feel like I got enough money, I'm going to do it.
I'm going to keep doing that.
Right. Like, I know it's not the smartest thing to do with it, but there are far, far worse things I could do.
Yeah.
So, and then we have people who would get pretty high praise from your typical finance personality, minus the decision to buy life insurance part. But it's definitely not the case that we meet with people who tell us their goal in retirement is to sell their house and buy a vineyard,
right?
And create a little B&B. And we just don't run into those many people.
That's on the top 5 list of ways to cut your money in half.
It is. We personally know some people who have done it.
Yeah.
If you don't like working
for free.
But no, and I think the shift in thought process, because a lot of people are so focused on, well, how much money have I accumulated? What's my rate of return, right? We like to gauge our success by, am I keeping up with the market? A lot of investment advice on the internet fascinates over this.
Mm-hmm.
Like, you buy a managed mutual fund and it underperforms the S&P 500, you schmuck. Why don't you just buy VU?
Right. Right.
Well, maybe it's because the managed fund has something that they want that VU does not.
Right.
Could be a quarterly distribution.
Yep.
So
could be that they manage the downside in a more effective way.
Right. So when you are trying to focus your accumulation, investment, portfolio building sites on income for retirement, what you do relative to the S&P 500 is not important.
Right.
Because if you don't pay your property tax and the local municipality comes to put a lien on your property, telling them, hey, I beat the S&P 500 by 1.5 points this last year, it's not going to stop the lien.
No. Returns don't buy groceries.
Nope.
Or pay property taxes.
Nope.
Income does, though.
It does. It does. And we have mentioned many times in the past that we have clients, but we also know people who are not clients of ours who have built secure incomes in retirement.
Yes.
Happiest people we know.
By far.
Like,
because they spend zero time concerning themselves with what's going on in the world today.
Mm-hmm. So for the people who accumulate what seems to be like a lot of money, but they haven't done anything to create guaranteed income, and they're entering into retirement, there's a lot of anxiety.
Yeah.
We know people who have literally done everything right, according to certain radio
popular
personalities.
Personal finance. Yeah.
Yep. And they do not live magnificently happy lives.
Right. That's not to say that they didn't get a good outcome either, though.
Nope, it's not.
But they
did what they were supposed to.
They wake up every day worried
that
that could all change.
Yep. Insurance policies, insurance contracts like annuities and life insurance are a way of reducing that anxiety.
Yep.
And I think as people grow older, they'll start to understand the benefit in terms of the trade-off of $1 of income versus like $3 of accumulated value.
Yeah.
Or whatever the ratio is.
I mean, I'm not anywhere near retirement, but being in my late 40s, right on the edge of making the tick over. I can tell you that my view on that very thing that you just pointed out has shifted dramatically in the past 10 years.
Mm-hmm.
It's unrecognizable from what it was 20 years ago.
Yeah. Yeah. And we hear it.
Yep.
Like we hear this from people, and not everybody who talks to us about their finances comes to us to buy life insurance. Like we have conversations with people in a totally hey, I'm trying to turn you into my client setting.
Sure.
Or other facets of the financial world. And the sentiment is pretty universal.
Mm-hmm.
As people get closer to retirement, the anxiety about income ratchets up, and they're willing to sacrifice a lot of what you would think is the most important thing if you were to hang out in certain forums or discussion groups on Reddit about investing in personal finance. It's just not significant if it doesn't bridge the path to how am I going to be able to pay for the things that I need to pay for when I stop working.
Yeah. Because I've been doing this job for 35 years and I'm really tired.
Mm-hmm.
And there's nothing wrong with the work. I'm just really tired.
Yep.
And I want to be done with this.
And look, one of the things that we didn't mention, and this is truer of annuities than life insurance, but it applies to both. There's a lot that can go wrong in the market that can significantly damage your prospects for retiring at all. Say nothing about comfortably.
Yeah.
Like if you have a certain amount of money and there's a correction and now you have less money, that makes it problematic. And maybe you were kind of thinking, all right, I've got 5 years left, and then something happens and you decide I got 2 years left, but now there's just been a major correction. What do I do? We have sold a number of annuities to people who told us, oh, I'm not going to touch the income benefit until like maybe 7 years out from now.
Yep.
Who call us like 3 years later and go, you know what? I changed my mind. Can we start income now? The answer is yes. And of course, it's not as high an income benefit because we don't wait as long, but the market can do what the market wants. It doesn't upset anything.
Right.
And they can start their income and it's guaranteed. And it doesn't matter what happens tomorrow with the market either.
Exactly.
So that is a mighty beneficial thing that people should not overlook or sleep on, I think is the new buzz phrase, even though we're not good at buzz phrases. Look at me stumble through that.
Exactly.
All right. That's enough for today.
Okay. All right. Well, I just want to add one more thing.
Yeah. Oh, yeah. Sure.
If
that's enough for me for today.
If you've listened to this and you thought, these guys are some of the smartest people I've ever heard, and I'd really like them to model this sort of thing with my numbers, then you should go over to our website or look in the podcast description, and there are ways to contact us. Just reach out, send us a message, let us know briefly what sort of thing you're thinking about, and we will get in touch with you. Or you can schedule a call, but please tell us something about yourself and what you're looking to do. And we look forward to talking to you.
Yes, and even if you're listening to this and you think, well, smartest, no, not really, but like probably top 10, that's fine. We'll settle for that. That's cool.
Fair to middling is okay.
We would love to hear from you.
We've been mostly average most of our lives. So there we go.
All right. I am Brandon Roberts.
And I am Brantley Whitley.
And we will see you next week.